Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 171, recorded here on June 22nd, 2025. This podcast is for entertainment only and is not investing advice. Please do your own homework. We are at block height 902328, Moscow time 1005. Fees are 1, 1, and 2. Lots to go over this week. We're going to go over the weekly market update outlook. We'll get into the weekly top Bitcoin news. We'll talk about this week's featured post on the Bitcoin Fortress Substack, do a little look ahead on upcoming articles there. We have a shout out and an announcement, a new book, Bitcoin Fortress, a simple guide to Bitcoin for beginners, which we'll talk about a little bit more at the end. Let's get into it. Wall Street on Friday ended largely flat for the holiday shortened week as market participants digested an escalating conflict between Israel and Iran and the Federal Reserve's fourth monetary policy decision of the year. The fighting between Israel and Iran intensified this week, with both countries targeting each other with waves of missile strikes. Meanwhile, U.S. President Donald Trump said he will decide within 2 weeks whether the U.S. should launch an attack on Iran. More on that later. Interest rates took the spotlight on Wednesday. The Fed's Monetary Policy Committee decided to keep the key policy rate on hold in a widely anticipated outcome. The committee's updated economic projections for 2025 still showed 2 rate cuts, but growth expectations were revised and unemployment and inflation estimates were bumped up. Fed Chair Jerome Powell underscored that the uncertainty stemming from tariffs was still extremely high. He said the central bank was well positioned to stick to a wait and see approach while keeping an eye out for the full effect of tariffs to show up in economic data. For the week, the S&P 500 slipped 0.2%. The tech-heavy Nasdaq Composite added 0.2%, while the blue chip Dow ended flat. Looking ahead, Wall Street has plenty to look forward to next week with a busy economic and Federal Reserve calendar and some major names on the earnings docket. Investors will be keeping a close eye on the ongoing conflict between Israel and Iran and the impact of the U.S. striking 3 nuclear sites in Iran. In terms of economic data, the spotlight will be on the May reading for the Core Personal Consumption Expenditures Price Index, widely seen as the Fed's preferred inflation gauge. The government will also publish the third estimate of U.S. Q1 GDP growth. Eyes will be on Jerome Powell on Tuesday and Wednesday, with the Fed chair scheduled to give his semi-annual monetary policy report to the U.S. House and Senate, respectively. Looking at quarterly earnings, parcel delivery giant FedEx, memory chip maker Micron Technology, and the world's largest shoe company, Nike, are scheduled to report results. Also in focus will be the results of the Fed's annual bank stress test, or the evaluation of a lender's ability to weather crises such as a financial crash or a recession. Moving on to Bitcoin news. We have the Hodler's Digest for June 15th through 21st from Cointelegraph. The likelihood of U.S. regulators approving a wave of crypto exchange traded funds is now a near certainty, signaling a continued pro crypto shift at the Securities and Exchange Commission, according to Bloomberg analysts Eric Balchunas and James Seifert. In a social media post on Friday, Seifert said he and Balchunas have raised their odds for the vast majority of crypto ETF approvals to 90% or higher, citing very positive engagement from the SEC. The analyst also suggested that the SEC likely views cryptocurrencies such as Litecoin, Solana, XRP, and Dogecoin as commodities, a designation that would place them outside of its immediate jurisdiction. Coinbase has secured a markets in crypto assets license from the Luxembourg Commission des Surveillance du Secteur Financier, which enables the exchange to offer crypto products across European Union countries. The move signals mounting competition in the European crypto market, where other exchanges have also been pursuing registrations. OKX and Crypto.com secured Mika licenses in January, followed by Bybit in May. Gemini is also on track to obtain a license in the region, according to a Reuters report. Coinbase has named Luxembourg as its new European headquarters, citing the country's reputation as a progressive financial center in Western Europe. Bordered by Belgium, France, and Germany, the country has been gradually advancing crypto regulations since 2019. Healthcare tech firm Semler Scientific says it plans to boost its Bitcoin stack by nearly 28 times in the next 2.5 years, growing its holdings from 3,808 Bitcoin to 105,000 Bitcoin. Semler is aiming to hold a total of 10,000 Bitcoin by the end of this year, then 42,000 Bitcoin by the end of 2026, before going for its final target of 105,000 Bitcoin by 2027, the company said on Thursday. It plans to use equity, debt financing, and operational cash flow to reach its target and has appointed a new director to lead the plan. Semler first purchased Bitcoin in May 2024 and said it would continue to buy and hold Bitcoin for the long term. Retail traders are almost evenly split on Bitcoin's outlook, with sentiment at its lowest level since April when Donald Trump's global tariff announcement rattled markets. Crypto research platform Santiment marketing director Brian Quinlivan said on Thursday that with crypto in a bit of a lull, traders are showing signs of impatience and bearish sentiment. He added the firm's social media analysis found that there are just 1.03 bullish comments for every one bearish comment, which hasn't happened since peak FUD, fear, uncertainty, and doubt, during initial tariff reactions on April 6th. And stay humble, StackSats. Telegram founder Pavel Durov gained court approval to leave France for up to 14 days to travel to Dubai, United Arab Emirates, where the company is headquartered. Durov will be allowed to leave France on July 10th after having a travel request denied by French officials in May, according to French news outlet Le Monde. The executive had requested permission to travel to Oslo, Norway, to deliver a keynote address at the Human Rights Foundation's Oslo Freedom Forum, which was presented remotely after French officials rejected his travel application. Bitcoin's price has had a rocky month, but recent analysis indicates that Bitcoin could surge another 300% this cycle. Technical analyst Gert van Lagen's X post highlights the AVIV ratio, a metric that compares Bitcoin's active capitalization, money in motion, to its total invested capitalization, realized capital, excluding minor rewards. Historically, when the AVIV ratio crosses its plus 3 mean deviation, it has signaled a cycle top. For example, Bitcoin was 1,200 in 2013, near 20,000 in 2017, and around 69,000 in 2021. Currently, the AVIV ratios level remains below these past peaks, suggesting Bitcoin could climb to at least $330,000 this cycle before the plus 3 mean deviation condition is met. The government of Norway is considering a temporary ban on crypto mining in the country in an effort to free up power, network capacity, and area for other purposes. In a Friday notice, the Norwegian government said it would be conducting an investigation in autumn that could result in a temporary ban on crypto mining data centers. Officials said they had the authority to enforce such a ban under Norway's Planning and Building Act, which includes provisions on allocating energy. It is uncertain how big a problem crypto mining will become in Norway in the future, the notice reads. The registration requirement in the new data center regulations will provide increased knowledge about the scope of data centers that mine cryptocurrency. How about getting more power? France has reportedly seen another incident targeting cryptocurrency users, this time involving the kidnapping of a 23-year-old man in a Paris suburb. According to a Thursday report from French news outlet Le Parisien, the victim was abducted in Maison Alfort, and held captive for several hours while the perpetrators demanded his partner to turn over 5,000 euros in cash along with the key to a Ledger hardware wallet containing an unreported amount of crypto. The report suggested that the criminals used violence to extract information regarding his digital assets. The unnamed man was reportedly held captive on Tuesday before being released in the town of Kretyl. Meme coins, promoted by political figures like Donald Trump, lax regulations, and crypto court cases abandoned by U.S. regulators have kicked off a crypto crime supercycle, says a pair of blockchain crime investigators. Pseudonymous blockchain investigator Zach XBT posted to X on Thursday that crypto has historically been ripe for abuse, but that it has noticeably increased since politicians launched meme coins and numerous court cases were dropped, further enabling the behavior. He claimed crypto influencers and key thought leaders face zero repercussions for scamming their followers. That said, there's never been a worse time to be doing black hat phishing, social engineering, robberies versus gray hat activity when the current environment is favorable, Zach XBT added. And that about wraps up the Hodler's Digest. All right, moving on. This is from CoinDesk. And this article was posted on June 20th. So it's a couple days old. Bitcoin quickly plunges below 103,000 with volatility bursts spurring $450 million in crypto liquidations. Of course, it got a little worse over this weekend. What started as a positive day for the crypto markets quickly reversed during the US session with Bitcoin sliding below 103,000. It's actually now down under 100,000 currently as we record. From the 106,500 level just hours earlier. At press time, Bitcoin had paired some of the losses, returning to 103.2, down 1.2% over the past 24 hours. Other large cryptocurrencies endured steeper declines. Ethereum's Ether saw a sharp 4.5% drop in just 90 minutes to as low as 2,372, with trading volume spiking to nearly 800,000 ETH, nearly 8 times the average hourly volume for CoinDesk data. Solana's SOL, Dogecoin, and Cardano's ADA were 3 to 5% lower over the same period. The volatility burst caught many traders off guard, liquidating about 450 million in derivatives trading positions on centralized exchanges across all digital assets, CoinGlass data shows. Some 387 million of liquidations were tied to long positions that bet on profiting from rising prices. While macro risks abound, among them the ongoing conflict between Israel and Iran, there was no immediate external reason for the sudden price swing. The S&P 500 and the Nasdaq 100 indexes only inched lower during the day. Zooming out, Bitcoin continues to trade within a sideways range between 100,000 and 110,000, consolidating just below its all-time record level. The mixed view of whether Bitcoin will go above 110 again or drop into the 90,000 area doesn't surprise me at all, and underscores the overall indecision people and markets feel, said James Toledano, Chief Operating Officer at Unity Wallet. The present BTC stalemate reflects a market caught between bullish long-term sentiment and short-term macroeconomic and geopolitical uncertainty, he added. And of course, if you are leveraged and the leveraged traders, they always get wrecked, whether Bitcoin goes up or whether Bitcoin goes down, they all get wrecked. So stay humble, stack sats, and enjoy the discount currently. And if it goes down even more, buy a little more. Why not? Next up, from Cointelegraph, this was posted on, looks like today. Texas governor signs bill adding Bitcoin to official reserves. Texas Governor Greg Abbott has signed Senate Bill 21, officially authorizing the creation of the Texas Strategic Bitcoin Reserve, a state managed fund that will hold Bitcoin as part of the state's long term financial assets. The newly established reserve operates independently of Texas's general treasury system and aims to strengthen the state's financial resilience while serving as a potential hedge against inflation, according to the bill text. Furthermore, only assets with a market capitalization exceeding 500 billion are eligible for inclusion, a threshold currently met only by Bitcoin. The fund will be administered by the Texas Comptroller of Public Accounts and guided by an advisory committee of 3 crypto investment professionals. In addition to direct purchases, the reserve may grow through forks, airdrops, investment gains, or even public crypto donations. A public report detailing the fund's holdings and performance will be issued every 2 years. SB 21 follows Abbott's signing of House Bill 4488, which protects the reserve from being absorbed into the state's general revenue fund, effectively insulating it from shifting budget priorities. Texas becomes the third U.S. state to approve a Bitcoin reserve law, joining Arizona and New Hampshire. Unlike those states, however, Texas is the first to commit public funds and establish a separate structure for Bitcoin holdings. A rising number of publicly traded firms are adopting Bitcoin as a treasury asset following an approach taken by Michael Saylor's strategy. On Friday, Bitcoin holding company Nakamoto Holdings, founded by U.S. President Donald Trump's crypto advisor David Bailey, secured $51.5 million in fresh capital through a private placement in public equity or PIPE deal to buy more Bitcoin. Last week, Paris-listed technology firm The Blockchain Group also expanded its Bitcoin reserves with the purchase of 182 Bitcoin for about $19.6 million, bringing its total holdings to 1,653 Bitcoin. Over the past month alone, organizations have added Bitcoin to their treasuries, according to data from BitcoinTreasuries.net, signaling continued interest in Bitcoin among public companies. Moving along from Bitcoinist.com, this was updated 34 minutes ago. Bitcoin treasury companies, a double-edged sword for the market, and here's why. Bitcoin prices have now dipped under 103,000 following a 1.17% decline in the past 24 hours. The maiden cryptocurrency continues to witness a significant market correction since reaching a new all-time high of 111,970 on May 22nd. Despite the ongoing downturn, Bitcoin remains an outstanding performer in the current crypto market cycle, boasting of over 600% price gains since the FTX-inspired market crash in November 2022. Interestingly, Miles Deutscher, a prominent crypto analyst, has dived into one of the asset's most prominent bullish driving factors, highlighting the positive and negative potentials. In an X post on June 21st, Miles Dasher shared an interesting take on the potential of Bitcoin treasury companies on the market. For context, a Bitcoin treasury company refers to any business with Bitcoin holdings on their balance sheet. Similarly to retail investors, these companies have opted to acquire Bitcoin as a reserve asset and long-term investment, as opposed to traditional assets such as gold, cash, or bonds. According to data from CoinGecko, there are 34 publicly traded Bitcoin treasury companies with a total holdings of 724,612 Bitcoin. These companies include names such as Tesla, Metaplanet, Marathon Digital Holdings, and most prominently MicroStrategy or Strategy, which singularly owns 576,230 Bitcoin, representing over 2% of the market supply. Generally, the advent of Bitcoin treasury companies have been a resounding bullish development, heralding institutional investment into Bitcoin alongside the spot ETF markets. Miles Deutscher postulates that the rising public recognition of Bitcoin's investment potential by mainstream companies would serve as a contributing factor to the asset's price rise, with potential targets set as high as $200,000. However, the renowned market analyst also highlights the potential risk these Bitcoin treasury companies pose as negative catalysts. Due to their fiduciary responsibilities, he warns of a possible scenario where forced selling could occur during a bear market or broader economic downturn. According to Miles Deutscher, the real threat may not be the actual deleveraging, but rather the front running by smart money investors anticipating the unwind. He notes that this dynamic could extend to the spot Bitcoin ETF market, which has already attracted over 46.66 billion in inflows. In a risk-off environment, institutional investors could trigger significant outflows, compounding market downside. At the time of writing, Bitcoin was trading at 102,843, reflecting a 1.85% decline in the past week. Following its price fall, investors' attention will turn to the $100,000 psychological support zone, breaking below which would trigger heavy market liquidations. Well, that's happening right now. One thought I have on the Bitcoin treasury companies, it's a lot of them trade at a premium to the Bitcoin that they hold underlying. Many of them are, I think MicroStrategy is like a 2x. There's some that are higher. There's some that trade at par. Um, that's a little concerning too, because, if that premium goes away, which it should at some point in the future, if you think about it, banks don't trade at a premium to the cash that they have on hand, for example, or they pretty much trade at book value, I guess is another way to say that. Um, so it seems logical that in the future that premium is going to go away. Um, and if you want Bitcoin exposure, just buy Bitcoin. I mean, or if you if you really want to own Bitcoin, but you don't want to do those, your own wallet, which you should, then you can, buy an ETF or something. But investing in these companies it's a good speculation. I mean, there's the stock's volatile. You could probably do covered call. You could speculate on options. You can have all kinds of fun if you really want to do that. But if you just want to own Bitcoin, it's better to just buy the real thing. Um, Something tells me that all these treasury companies are, there's going to be more and more of them, and something bad's going to happen, and there's going to be a falling out, and probably the big ones will survive, like MicroStrategy, but some of the other ones probably will not. And that, yes, that will probably trigger some Bitcoin liquidations, and yes, that will cause the price to drop. But think about it as an opportunity to buy more cheap sats. Enough on that. Moving on. This is also from Bitcoinist. This was published a couple days ago. Bitcoin gets a billionaire boost from Mexico's third wealthiest man. According to a recent Kitco News interview, Salinas Ricardo Pliego, founder and chairman of Grupo Salinas and Mexico's third richest man, has stepped up to his Bitcoin buying. Bitcoin trades at 1049, down over 6% from its all-time high of $112,000. Pliego isn't fazed by the drop. He's loading up while others hesitate. He already owns about 70% of his portfolio in Bitcoin. Based on reports, he boosted that share again last week. He didn't share exact figures, but called it a considerable increment. He isn't waiting for the perfect price. He just wants more coins in his wallet before what's next. Bitcoin's slide came after Middle East tensions rattled markets, yet Pliego says his moves aren't tied to war news. He sees every dip as a chance to buy. Well, now there's something. Couldn't agree with him more. Other big players are doing the same. That trend leaves fewer coins moving between wallets and exchanges. On-chain data shows wallet balances for the largest holders climbing, even as prices slip. Pliego has warned that fiat currency loses value over time. He pointed out that the US dollar lost about 90% of its purchasing power over the past 40 years. He echoed strategies Michael Saylor when he called Bitcoin a shield against money printing. Pliego even wrote a book, The Bitcoin Enlightenment, where he argued that the crypto marks the end of fiat. The tycoon admits Bitcoin can swing wildly when big economic news hits. He said holders should look past daily charts, focus on where this thing is going, he told Kitco News. He isn't alone. Coinbase CEO Armstrong thinks nations will hold more digital assets than gold down the road. That idea gives Pliego plenty of confidence. Pliego has hinted he may go all in one day. That would put every peso he owns into crypto. It's a bold plan. It's also a risky one, given the crypto asset's history of 5 to 10% moves in a day. Still, his voice carries weight. When a billionaire piles in, others pay attention. Salinas Ricardo Pliego is betting big on Bitcoin's future. He's buying At 104,701, even after a 6% pullback, he sees Bitcoin as a way to dodge inflation and come out ahead. For now, he's stacking sats and urging everyone else to get on board. If his bet pays off, early buyers could reap huge gains. If not, they could face steep losses. But either way, Pliego's moves show that confidence in Bitcoin remains strong among the richest investors. Next up, from bitcoinnews.com. This was posted on June 16th. Trump Media gets SEC approval for $2.3 billion Bitcoin treasury. Trump Media and Technology Group, the company behind Truth Social, has received approval from the United States Securities Exchange Commission regarding its plan to raise and use $2.3 billion to build a big Bitcoin treasury. This is a big and controversial move by the media company tied to US President Donald Trump. The plan involves converting part of its corporate assets into Bitcoin, similar to what companies like Strategy have done. PMTG filed a Form S3 with the SEC on June 6th. The form allows public companies to register securities for resale. A week later, the SEC declared effective the filing, and TMTG can now use the money raised from previous deals to buy Bitcoin. According to the filings, the company raised $2.3 billion from the resale of about 56 million equity shares and 29 million shares of convertible notes. Almost 50 institutional investors participated in the raise. This is one of the largest Bitcoin treasury deals for a public company, TMTG said in a press release. TMTG CEO Devin Nunes said this is part of a bigger plan to grow the company beyond social media and into the fintech space. We are quickly developing our fintech brand, social media platform, and streaming service and accumulating a Bitcoin treasury to support the Patriot economy, said Nunes. The funds will be managed through TMTG's fintech arm, Truth.fi, and the company will store its Bitcoin with its trusted custodians, Crypto.com and Anchorage Digital. Nunez also said this is a way to protect the company from financial discrimination, stating the Bitcoin treasury will allow the company to defend itself against harassment and discrimination by financial institutions. This seems to be more than just a business decision and more like a political move. Trump Media's Bitcoin push comes at a time when U.S. digital asset regulation is unclear. By moving into digital assets, TMTG signals a bold break from the traditional financial norms and aligns itself with Bitcoin friendly audiences. American institutions are recognizing Bitcoin as a safe haven asset, so maybe media and political groups will start to explore the asset further. Trump Media isn't stopping at a Bitcoin treasury. They filed paperwork to create a spot Bitcoin exchange traded fund called the Truth Social Bitcoin ETF. If approved, this ETF will give traditional investors another way to get exposure to Bitcoin's price. Again, Crypto.com will be the exclusive custodian for this ETF. One of the investors in the Bitcoin treasury is Don Wilson, founder of DRW Investments. His firm put in $100 million. Some are wondering if there's a conflict of interest since his digital asset trading firm, Cumberland, just had a case dropped by the SEC. All right. Next up, we have from Decrypt, and this was posted today. Which crypto IPOs could be next, following Circle? Stablecoin issuer Circle's debut on the New York Stock Exchange exceeded expectations after its stock quadrupled from its $31 IPO price within 24 hours, raising over $1.1 billion and becoming the largest crypto IPO in recent history. Now, several major crypto firms are vying to go public, from prime brokerages to exchanges. The political and economic winds are beginning to shift in their favor. President Donald Trump's administration has pushed for a more conducive environment for the industry as the SEC continues to drop major enforcement cases left over from the Biden era. It also marks crypto's most significant push into mainstream finance since Bitcoin ETFs were approved in January of last year, as pension funds and asset managers seek exposure, while firms fish for capital to scale up and meet changing investor demands. Here are a few of the companies lining up to go public. FalconX, valued at $8 billion during its last funding round in 2022, is considered a New York Stock Exchange listing as early as this year, according to sources who spoke with Decrypt this month. The crypto-focused prime brokerage has held preliminary discussions with bankers and consultants about the IPO process, though it hasn't yet secured an underwriting bank. When you launch an IPO, you need to have a story. One source familiar with the matter told Decrypt, "You're selling yourself to the investing public." The firm is exploring ways to enhance its public profile again ahead of a potential public debut, while also ramping up strategic partnerships and acquisitions to meet the growing institutional demand for crypto. The Winklevoss twins didn't wait long. Less than 24 hours after Circle's debut, Gemini confirmed it had filed a confidential S-1 with the United States Securities and Exchange Commission. The number of shares of Class A common stock to be offered and the price range have not yet been determined, Gemini said in its IPO filing. Although the company has yet to disclose timing or valuation targets, insiders expect the listing to occur before the end of the year. Bullish, the crypto exchange backed by billionaire Peter Thiel, has filed for a U.S. IPO with investment bank Jefferies potentially leading the offering. The company previously walked away from a $9 billion SPAC combination with Farpeak in 2021 as crypto markets collapsed. Led by former NYSE President Tom Farley, Bullish offers blockchain-based trading with institutional-grade infrastructure. The company was founded in 2021 as a subsidiary of Block.one and raised $10 billion in digital assets and cash from heavyweight investors, including Peter Thiel, Louis Bacon, and Richard Lee. Justin Sun's Tron is taking a different route, going public through a reverse merger with the NASDAQ-listed SRM Entertainment. The deal was brokered by Dominari Securities, a firm tied to Eric and Donald Trump Jr. While Eric Trump later clarified that he had no public involvement in the listing, Tron's pivot to U.S. markets suggests a regulatory thawing. The transaction follows Tron's transition from Foundation Control to Tron Tech Limited, a British Virgin Islands firm believed to be owned by Sun, in response to regulatory pressure, including a 2023 SEC lawsuit that was later resolved. Major U.S. crypto exchange Kraken's parent company, Payward Inc., is reportedly streamlining operations ahead of a potential IPO in 2026, although the company later said it isn't rushing to go public. I think the way we think about it is that if it's in service to our clients to going public, building that trust as a currency, then we'll think about doing it. So we'll always be ready for it, but it may not be that we'll have it on a specific date. Co-CEO Arjun Sethi told Axios in March. We'll pursue public markets as it makes sense for our clients, our partners, and shareholders, a Kraken spokesperson told Decrypt. South Korea's second largest crypto exchange, Bithumb, is preparing for an IPO by late 2025, according to local media reports. The exchange has rebounded to claim 25% of the local market, up from single digits in 2023, following years of decline after a $30 million hack in 2018. Bithumb plans to restructure into two entities on July 31st, 2025, Bithumb Korea, the exchange arm, and Bithumb A, managing other business ventures. The exchange will list on South Korea's Kosdaq first, with a possible NASDAQ listing to follow for global investor access. Samsung Securities will reportedly underwrite the offering. Thailand's leading crypto exchange, Bitcub, plans to go public on the Thailand Stock Exchange this year to raise capital and boost market presence. CEO Jirayut Shruprisopa confirmed last year that the company has hired financial advisors to prepare for the IPO, according to a Bloomberg report. If current momentum holds, 2025 may mark the year crypto finally breaks into Wall Street's inner circle for good. Coinbase's direct listing in April 2021 was the first major test. Coin opened at $381 and briefly touched $100 billion valuation before closing at $328.28 on its first day. Since then, the stock has seen sharp swings, trading as low as $33 in 2022 during the crypto winter, before rebounding above $330 in mid-2025, as per Google Finance data. But the stock did fade a little under regulatory pressure and market volatility. Circle's breakout, backed by a friendlier administration and clearer optics, shows how far the scenario has shifted since then. In today's market, the strongest IPO candidates combine explosive growth, real business models, and category defining position, Alex Felix, co founder and CIO of CoinFund, told Decrypt. Two of the most successful IPOs this year, CoreWeave and Circle, highlight how public investors are eager for exposure to crypto and AI, he said. We expect more companies will follow in their footsteps as there is a tremendous amount of growth in these two sectors. Moving along, next up from Crypto Potato, one of my favorite sources. This was last updated today. Crypto native asset managers grow from 1 billion to over 4 billion in on-chain capital. Crypto native asset managers are becoming a significant force in decentralized finance. Firms such as RE7, Gauntlet, and Stakehouse Financial are leading the charge. Since January 2025, the on-chain capital they manage has surged from 1 billion to more than $4 billion. According to a joint report by the analytics firm Artemis and DeFi yield platform Vaults, these players are not only deploying capital across diverse opportunities, but are also contributing to the evolution of DeFi by implementing risk management practices and advanced allocation strategies, especially within the stablecoin sector. The Morpho protocol now hosts nearly $2 billion of this professionally managed capital as institutional interest in DeFi native structures rises. Gauntlet commands 31% of this market segment, with Stakehouse Financial following at 27%, RE7 at 23%, and MEV Capital at 15.4%. These statistics indicate an increasingly competitive environment among specialized managers. At the same time, institutional views on DeFi are seeing a transformation. Once considered an unregulated frontier, DeFi is now being reimagined as a flexible, programmable financial layer. The development of permissioned DeFi markets on platforms like Euler, Morpho, and Aave represents a conscious shift to meet institutional standards. These environments offer controlled access points where institutions can interact with DeFi protocols while satisfying essential compliance requirements, including KYC, AML, and counterparty risk assessments. The report stated that institutional perspectives on crypto are shifting, especially as US regulation evolves and DeFi platforms mature. DeFi is no longer seen as an unregulated threat, but is increasingly viewed as a customizable integrated financial layer. Many fintech firms, crypto wallets, and exchanges are now using DeFi as hidden infrastructure, abstracting its complexities to improve user experience. This approach helps with yield integration, capital efficiency, user retention, and new revenue streams. Institutions primarily engage with DeFi through three avenues: stablecoin yield, crypto yield, and borrowing. These services are embedded in familiar centralized apps, masking the underlying DeFi mechanisms. For example, Coinbase and PayPal offer stablecoin yields via USDC and PYUSD, respectively. On the lending side, platforms like Coinbase offer crypto-backed loans using protocols such as Morpho, exemplifying what the report calls the DeFi mullet, a fintech interface powered by a DeFi backend. Moving along, this article is from Bitcoin Magazine. It's the last one that we'll go over. And it's was updated on June 20th. Article's entitled "What Happens to Bitcoin When Quantum Computers Arrive?" Recent announcements in quantum computing have brought renewed attention to the question of how these advances could impact Bitcoin. In a newly published report, we provide an overview of the current state of quantum computing, the threat model for Bitcoin, and the next steps being considered. This post offers a summary of our key findings and recommendations, and then you can reference the full report. And there's a link in the article. And of course, I'll put links to all the articles I've reviewed in the show notes. We outline a dual track migration strategy for Bitcoin in response to the potential emergence of quantum computing. Long term path. This comprehensive approach assumes that there is still a substantial window of time before quantum computing poses a practical threat. Drawing on the timelines of prior protocol upgrades such as SegWit and Taproot, we estimate that implementing a full quantum safe transition could take approximately 7 years. Short-term contingency path. This track serves as an emergency response in the event of a sudden breakthrough in quantum computing. It prioritizes a rapid deployment of protective measures to secure the Bitcoin network and could be executed in roughly 2 years. In both scenarios, funds that are carefully managed, i.e., stored in hashed address types like P2PKH or P2WPKH, without address reuse, are already protected from quantum attacks. However, spending those funds in a post quantum secure way would require additional infrastructure, which is expected to be developed during the second phase of either timeline. If realized at scale, quantum computing could offer significant speedups for specific classes of problems by harnessing the principles of quantum mechanics. Of course, of particular concern are cryptographically relevant quantum computers, machines capable of breaking the mathematical assumptions underlying modern cryptography. This includes algorithms like elliptic curve cryptography, which is fundamental to Bitcoin security. While quantum computing has been an active area of theoretical research for decades, significant engineering challenges remain in building large-scale quantum machines, especially CRQCs. To date, no quantum computer has surpassed classical supercomputers in solving commercially relevant problems, nor demonstrated the capabilities needed to threaten modern cryptography. Technological progress is notoriously hard to predict. It rarely follows a linear path, and history offers many examples of sudden breakthroughs. In anticipation of potential shifts in the cryptographic landscape, several organizations have proposed timelines for transitioning cryptographic signatures. One of the most prominent efforts comes from the U.S. National Institute of Standards and Technology, which has been leading the development of cryptographic standards. Their published recommendations highlight two key dates. By 2030, traditional encryption methods such as ECDSA and RSA should be phased out. By 2035, all cryptographic systems should transition fully to post-quantum algorithms. The UK's National Cyber Security Centre follows a comparable approach with a three-phase migration framework that aims to complete the transition to post-quantum cryptography by 2035. Other entities such as the EU and China are also actively working on post-quantum cryptography strategies, although they have not yet published formal deadlines. At the industry level, several leading companies, including Cloudflare, Signal, and Google, have begun adopting post-quantum cryptography. They're implementing hybrid signature schemes that combine traditional encryption methods with post-quantum algorithms, requiring an attacker to break both in order to compromise the system. Apple has also announced plans to transition to post-quantum cryptography. As PQC becomes an emerging industry standard, more companies are expected to follow suit. The financial stakes of the threat to Bitcoin are substantial. Figure 2 illustrates analysis revealing that approximately 6.51 million Bitcoin, worth over $700 billion at current valuations and representing 32.7% of current supply, is quantum vulnerable. This includes funds held in addresses that have practiced address reuse, funds secured by inherently quantum vulnerable script types, and funds that are vulnerable via public key exposure on forks of Bitcoin, such as Bitcoin Cash. Quantum computing is expected to impact two key areas of Bitcoin: mining and transaction signatures. In quantum mining, the difficulty of combining the power of multiple machines gives a disproportionate advantage to large quantum miners, threatening decentralization. For transaction signatures, the risk is more direct. A CRQC could derive private keys from public keys, enabling theft of funds. Importantly, the timeframes for these two threats differ significantly. Building a quantum computer that can outperform modern ASIC miners presents a far greater engineering challenge than constructing one capable of breaking digital signatures. This is due in part to the low clock speeds of quantum processors, which are much slower than the highly optimized and specialized hardware used in Bitcoin mining, and the lack of parallelization. A CRQC could break the assumption that it is infeasible to derive a private key from its corresponding public key under ECC-based schemes, potentially allowing attackers to steal funds. In Bitcoin, ownership of a UTXO is proven by signing a transaction with the private key corresponding to a given public key. If a CRQC can derive that private key from the public key, it can falsely claim ownership and spend the funds. This leads to two distinct quantum attack scenarios. When spending from hashed addresses, public keys are revealed temporarily, giving attackers a brief window, typically minutes to hours, to derive private keys and steal funds, possibly through chain reorganization. In contrast, certain output types, P2PK, P2MS, P2TR, expose public keys permanently on-chain from the moment funds are received, giving attackers unlimited time to mount quantum attacks. Address reuse converts the temporary vulnerability of hashed addresses into permanent exposure as public keys remain visible on-chain after the first spend. As shown in Figure 3, the most vulnerable targets are addresses that hold significant funds with exposed public keys, such as institutional holdings that practiced address reuse. Bitcoin mining is based on the principle that the probability of finding a valid block scales linearly with the amount of computational effort expended. Grover's algorithm, a quantum search technique, offers a quadratic speedup for brute force search. However, unlike classical mining, Grover's algorithm is not easily parallelizable. This limitation could give a disproportionate advantage to entities with access to large scale centralized quantum hardware, potentially increasing mining centralization rather than broadening participation. In addition to concerns about centralization, quantum mining could alter miners' optimal strategies, potentially degrading chain quality. For example, by increasing the rate of stale blocks, a higher stale block rate can make certain attacks, such as selfish mining or double spends, less costly and more feasible. As noted earlier, building a quantum computer capable of outperforming modern ASIC miners is believed to be much farther off than developing CRQCs. As such, quantum mining is not an immediate concern and is unlikely to be a practical threat in the coming decades. Nevertheless, exploring proof of work mechanisms in a future quantum context remains a worthwhile research direction. Developing a better understanding of the potential risks and mitigation strategies would help the ecosystem prepare for a world where quantum mining becomes feasible. Quantum secure cryptographic signatures have been studied for decades, but interest and progress have accelerated in recent years. This has led to the development of candidate protocols such as SPHINCS+, Falcon, and others. However, as a relatively young field, it has seen several proposed schemes initially believed to be secure but were later broken. For example, Psych, even by classical computers. While trust in the current candidates is growing over time, the field remains active and involved and evolving. As detailed in Table 1, a significant limitation of post-quantum signature schemes is their substantially larger key and signature sizes, along with increased verification times relative to classical algorithms such as ECDSA and Schnorr that are currently used in Bitcoin. To address this, some proposals suggest leveraging SegWit's witness discount mechanism to reduce on-chain footprint. However, the best approach for integrating quantum secure signatures into the protocol remains an open question. In addition to performance trade-offs, quantum secure schemes do not yet support the full range of functionality provided by classical signatures, such as those relied upon in the Lightning Network and other applications. This area continues to be an active focus of research within the cryptography community, and further improvements are expected in coming years. If the Bitcoin community chooses to migrate vulnerable funds to quantum-resistant formats, a large number of UTXOs will need to be moved. Several approaches are under consideration, each making different trade-offs. Some focus on enabling secure spending of hashed address outputs without exposing the public key prematurely. Others propose mechanisms to limit or regulate the spending of UTXOs that are directly vulnerable to quantum theft. These strategies generally require changes to consensus rules such as soft forks and must also account for the practical challenge of moving a large volume of UTXOs, potentially taking 4 to 18 months even with sustained allocation of block space. The Bitcoin community faces a fundamental philosophical question. Should quantum vulnerable funds be made permanently unspendable, burned, or remain accessible to quantum computers, stolen? This decision touches Bitcoin core principles of property rights, censorship resistance, and immutability. The burn approach treats quantum vulnerability as a protocol bug requiring a conservative fix, preventing wealth redistribution to those who win the CRQC race. The Steele approach maintains that burning funds violates the property rights of their owners, effectively confiscating assets from those who may simply be unaware of the threat or unable to migrate in time. The implications extend beyond philosophy to market dynamics. A coordinated burn would permanently remove millions of bitcoins from circulation, potentially increasing the value of remaining coins while providing market certainty. Allowing quantum theft enables massive wealth transfer to entities with quantum capabilities, potentially creating prolonged market uncertainty and volatility as funds are gradually drained. A decision on this matter is a defining moment for Bitcoin's governance model, requiring the community to balance security imperatives against foundational principles of user sovereignty and non intervention. The arrival of CRQCs would mark a major shift across the digital landscape, placing much of today's secure communication, authentication, and digital infrastructure at risk. While quantum computing is not yet a practical reality, preparations are underway to help ensure Bitcoin's resilience against future developments. Research continues across both the cryptographic and Bitcoin communities to assess potential risks and explore practical responses. Our report highlights two areas that may warrant near-term attention: stopping address reuse and evaluating the trade-offs in the burn versus steal discussion around exposed funds. The window for proactive action is open now, though it may not remain open indefinitely. Staying informed about advances in quantum computing and cryptography is essential, as is studying potential migration strategies and their broader implications for the Bitcoin ecosystem. Ensuring Bitcoin's long-term security in a post-quantum world requires thoughtful, deliberate work starting now so we can make well-informed decisions while time is still on our side. All right. Uh, Last, I'd like to talk about this week's featured post on the Bitcoin Fortress Substack. Article is entitled Bitcoin Private Key Management Best Practices and the Future of Sovereign Security. So check that out. I will include a link in the show notes, as I always do. And here's what's coming up: 21 Ways to Wealth, Michael Saylor's masterclass on Bitcoin prosperity. That's coming up on Monday. Then we have The Hardest Part to Grasp, Bitcoin's growth trajectory, followed by When Liberty Worked, real world case studies in freedom and prosperity, followed by Are We Near the Edge? And then an interesting series for the kids, followed by Teaching Kids About Money in a Bitcoin World. And the last in the series is Bitcoin and Family Governance Structures. So that'll be coming up in the future. Please check it out. Want to send a shout out to at user 1719730 for 95 sats on Fountain. Thank you, sir. And I did also want to mention that my new book, Bitcoin Fortress, a simple guide to Bitcoin for beginners. Very simple, very straightforward, hopefully a useful orange pilling tool that I published. So I think the Kindle version is up. The paperback should be up soon, and I am working on an audio version. So please check that out. And with that, I will thank you all for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. You can also follow my Substack at bitcoinfortress.substack.com, and you can follow me on Nostr. My inpub is in the show notes. And with that, I will talk to you all next week. Bye bye.